Good afternoon, everybody. It's Michael here with your supply and demand report. I hope you're all well. It's been a little while. Thank God for the good news on the vaccine. Hopefully, we will have this all behind us very soon. Today, I'm going to run through some of our usual suspects, some of the charts we look at. But before I do that, I just wanted to say a big thank you to all of you who've been in touch. I have been a little bit unwell in the last couple of days, really, but nothing major. I'm still in the room with my guys in the round table as much as I can. But if you do hear me cough or anything or sneeze, that will be because of what I'm going through. And thankfully, it's not COVID, so it's a bit of a cold. It could be worse, I suppose. So we thank God for every day. All right, so let's get to it. I'm going to be fairly quick with this. This is my second try at this video. I had some technical issues with the first one. So I'm going to try and go over it again with you all, just to make sure that you understand my thought process. So we'll start with the US dollar. As you can see, the US dollar has remained in a sideways range for a long time now. We're looking at back since July when it fell into these lows and it stayed there. We've had these levels marked, and since then we have held, but the bounce from these levels have found supply on smaller time frames up into this area, and we've come down deeper into it, and we are again holding. There are demand levels just below. This one is a very first touch to it, very shallow test, so it probably will go deeper into that level. And there's another level around the 90-92 area, and obviously levels further down. So that's what we're looking at. With the dollar where it is now, it is probably not a good idea to be looking for, initiating new long positions in the euro. Because if we are going to get a bounce from the dollar, it's from these areas here that we're likely to see that. Now, would I be going short the euro? Probably not, except on an intraday sort of time frame for a quick income type trade. Because as you will see in the euro, if we go to that, the euro itself is sitting up into these areas of supply. So for short-term income, up into here for sure. But something I wanted to point out to you in the euro, and I mentioned it in the previous video, was what I noticed here about this pattern in the euro that has come down, and I've marked it off just to remind myself mentally as well that the euro has held these bottoms into this demand zone, and it's come up. What I noted though was when it's come up for, the third time into these supply areas up into here, notice that the sell-off isn't as great. We're not having that, sell-off back to these lows around 116. We're now holding up around the 118 to 119 level, which suggests that buyers are coming in at higher levels to hold this market up, and they are likely to push up. On this time frame, for those of you trading really small areas, I'm going to be looking at that level. So it is very likely that prices will come up into here and maybe pause, but again we will be watching to see what comes up when prices do get there. But in terms of going short the euro, not right now. As I said, not for, even though we're into supply, we don't see that evidence that we look for of sellers beginning to take control in this market. If anything, we're seeing buyers beginning to take control in this market. So I'll show you a trade that I'm in the Euro Aussie, and this is a picture I took before the entry here in the Euro Aussie, looking at it on a 1 hour chart. This is the before picture. If I show you the Euro Aussie now, this is what it looks like. This is the same chart I just showed you, and that trade is now being managed. The stop was just below here, quite nice and tight, as we always do below the level, and it's achieved first targets, and we're now looking to to see what else it does. So that's why I'm not so keen on shorting the euro, at least not against some particular pairs. And talking about that takes me to the topic of relative strength. If I could just touch on that real quick, I wanted to say a big thank you and shout out to Mango 2 Juice on TradingView for creating a really useful currency strength indicator. I've created mine, but this sure beats what I created. So Mango 2 Juice, whoever you are, thank you very much for your work. It's very much appreciated. It's a very quick glance into it, so thank you very much for making this. It's been really useful for me in my relative strength analysis that I like to do for the pairs, and even for the US markets. It's the same thing. Okay, so that's the euro. I spent a bit too longer than I intended on that one, but I hope it was useful. And then going to the pound really quick. So the pound is moving on higher. It's into supply. You can see that it is still holding demand levels. Was there something I was looking at in here? So these are the levels that I marked out in yesterday's video that I wanted to show you guys, and prices have just held between the 4-hour supply there and the 4-hour demand, and it's just not going anywhere. What is not happening though yet is prices falling despite us being in bigger picture supply. So this is something that I always remind supply and demand traders about, and I'll say it here, that even though we are in supply, it is not an immediate decision to sell. The decision matrix that I use says you are in the environment to sell. The higher probability event would be to sell, but you still need to see other traders agree with you. So waiting to see the evidence of that selling. For example, this was a significant bar that closed really strong in big picture supply, removing some demand, not great demand, but some demand there. And you can see when prices have come up there, the sellers who are up here have tried their best to sell this market down, but they are being met by demand. So knowing this, if you're a trader who got short, which would have been quite early, you'd have been one of the supply and demand traders trying to trade at the top, which is not a bad thing. You just have to be very careful about it. If you went short into this supply zone and you had your profit for a time, you moved your stop to break even, you would have seen that you've been stopped out break even. If you're not out yet and you're seeing this market doing this and not going anywhere, given the uptrend that's happening, it would be the way that I would manage it would be to start scaling out of that position or get out of it entirely, because it's not really doing what I expected it to do in the time frame that I expected it to do. If it does go on and move way back down, then okay, so I missed that trade. There will be many more. But it's something to keep in mind, especially when you're doing your review as we're coming to the end of the year and you're going over your trades. I've done this long enough to have gone over thousands and thousands of trades over the so many years, over a decade doing this now, to know what works for me. But I only speak for myself, and sharing my thoughts with you guys. Hopefully it helps somebody. Okay, so the New Zealand US dollar, I was talking about this level yesterday, which is why it's circled, that we were potentially forming a rally-based rally. This was the confirmed demand zone below. We've had the one move away. It's not big enough yet, so that remains a circle. It's not fully formed yet, but you can see the basing. It's quite nice and tight, not much time spent at that level. Move out. We just need to see some more follow through. Longer term picture, obviously the trend is up. We're breaking out of new highs, creating demand zones as we go. So looking to buy pullbacks is still the way to go. Obviously the New Zealand economy is around the world seen as one that is likely to recover quicker as we get the vaccine now, because they've managed to contain the virus better than most Western countries. So they're in line to be one of the first economies to recover. So you can see the inflow of money into the New Zealand dollar as a result of that. Okay, so let's go again to the S&P 500. Those are my alarms going off for some of the trades that I wanted to look at. So we're again seeing the S&P 500. So the S&P 500 has been caught in this range. I've marked out the range. This is the range of the Pfizer news. Monday, must be a couple of weeks now, Monday the 9th. So it's stuck in that range. It came to the bottom of it, and it's been ranging in there since. Yesterday was quite a big day. It was a very nice day for us trading the S&P. I've been long down in here on smaller time frames, and it's done quite well. That trade is almost over. Most of the position is off. But you can see that market again is also not falling. It's risen, and if there was going to be selling, as evidenced by this bar, if it was going to start falling, it would have happened. What it's done is just held. Every time it's come down, people are using this area as the demand level to buy and making new highs. So one way to keep an eye on it would be to say, well, I'm going to mark the momentum of this and see, bearing in mind you're still in the range of this big candle. So getting out of that range will give more confidence to buying, pullbacks to demand. All right, let's go around the world a bit. Let's go to Australia. Very strong trend going up. We now created this level just yesterday with the move, and we have another little level right below it, another bigger level right below that. So we're forming rally-based rallies, showing us the strength in this market. Did I mark out? Was this supply? Yeah, so look at the strength here. This was what I wanted to show you yesterday, that you see how much basing has happened below where this supply zone was, and then we had the move up that just immediately took it out with a basing just before it. That suggested to us that this level was more likely than not to be broken. You had an uptrend that was looking to continue. Again, expecting the sellers to come in. This they did for a time, but again, buyers showing up at demand levels and taking it higher. So when you expect something to happen, I mean, all of us as supply and demand traders, and even just regular speculators, we would expect the market with this kind of nice zone, the location of the zone and all of that, for the markets to fall on getting there. If it had continued rising as it was here and gotten to that level, we probably would have gotten a better pullback. Also depending on what demand levels came in as prices rose, because obviously it was an uptrend, a strong one off the March lows. This was the Corona fear fall, rose up, and instead of falling back, if we think this is a big move down, really scared a lot of people, a rally opportunity to join the short, we would have expected it to make new lows. Where's my arrow? We would have expected it to make new lows, to come down. It didn't. Rather, it went sideways, which suggested to us that the buying was coming in. And rather than this market falling, every time it tried to fall, the buyers came in to hold it up, which was a sign of internal strength for us. So not too surprised with that move. We're now looking for an opportunity to join it. Right now we are sitting into supply levels. There are two of them. I'll just join them together. They're not the greatest, but they're high up there, and they are beginning to show some evidence of sellers trying to use them to come in. But we have a lot of demand below, like we said. So Australia is looking strong. Even stronger, or looking even stronger, was the Japanese market, which has gone on to new highs as well, gone on to really big new highs, and is holding demand levels. So pullbacks now will also be people will be looking to buy them until proven otherwise. So until we get below this demand level, it's still a buy, and you have other demand levels below as well, that people will be looking at to buy at. Okay, so that's Asia. Let's look at Europe with the DAX. So Europe is much weaker. If you look at the DAX, it's stuck into that supply zone. It also is not falling. It's trading through the supply actually, but it's not the strongest. Neither is the UK market. So that market is also holding up after such a big rally. It would need some time to digest the gains, and that is what it's been doing for the last couple of weeks now, holding up at these high levels rather than falling. It may eventually fall, but it hasn't done that yet. Maybe on smaller time frames. Obviously you can see sellers trying to sell this thing off. They tried there on that day on the 17th. They're trying again today to sell it off as well. So we'll see how that holds up. Okay, if we continue to go down and we start breaking through these lows at 62, 62, then we will be more confident in going for shorts. Okay, for now every drop is to be treated with suspicion. Okay, and let's go into some energy markets. So natural gas. We had this level marked in the round table for a while now. We talked about it, I think, 2 weekends ago and last weekend. It's proven to work quite well. We are looking for opportunities to go long. There was an opportunity that teased me today. I'll show you. It teased me. Just didn't make entry. Just didn't. And it's target one is well beyond hit. We're back into that supply. I was looking at this morning and wanted to get long into this area just to join that trend, but it was so strong it just didn't come back to the level. Looking at it on the 4 hour, it's still quite strong. You can see the momentum is still very much intact. If you join this low to this low, it's still very much to the upside. We have had the supply do what it's supposed to do, but what we did was come back into this breakout area that a lot of people would have been looking at. But what did we do? We went down to look for our levels, and that was really a good one. Maybe if I had put it to the top of that, but that's not usually the way I draw my levels, as you guys know. So that's just another one of those things. Yeah, it happens. It is what it is. Okay. So going to crude, again, another market that hasn't fallen down. It is still up there, holding up against the top of the range. It's trying to push out now, forming demand levels as it goes. What do we have above us? Some supply up there. So you can be sure that a lot of people are aware of this break above this high in oil around the world. Now, the question is, will they hold? So we have demand levels being created. So we can only go by what the charts are telling us, that demand is coming in. So pullbacks are a buy until proven otherwise. That's all we can do. Okay. A quick look at the markets. The metal markets, I should say. We had a big fall yesterday, not so much in silver, but in gold. So this was a market that we were looking at in gold, and I believe it's better drawn. Yeah, that's it. This is the futures. This is gold futures, which is from the Chicago Mercantile Exchange. On TradingView, it's delayed data, so that's why you see the D there. But for the current one, this is the CFD with Orlando, one of the brokers on TradingView. So you can see that gold is sitting into level on top of level demand zones. This one I don't like it. It's just not as well located. It is a level, but it's not as well located. And the profit margin is not so great because we will anticipate that there will be sellers looking to come in to try to sell this market into this supply zone. Firstly, the flip zone that's broken, the demand zone that's broken there, and the new supply zone that's been created as a result. So looking to the lower levels to see if gold does get there. We'll be looking to see if we can initiate some positions in gold, where we have been and we still are bullish gold long term. So we'll see what happens with that. We expect it to rise much higher, but we do like these kind of pullbacks because they give us the opportunity to get into gold. Silver has been obviously much stronger, and if I show you the gold to silver ratio, for example, you will see what I mean by that. Let me just type that in. So if you check the gold silver ratio, so every time this market is falling, it means that gold is weaker than silver. That is beginning to peter out a bit. It's not, the difference isn't as great as it used to be. And for short periods now, we've actually seen gold beginning to strengthen again against the silver market. So it's now sort of even, as we can see here. So we'll see. I usually prefer for silver to outpace gold, but hey. Okay, so I think that will do it, guys. Thank you all very much for being patient and for continuing to share with each other on the Trading Institutional Order Flow thread. If there are any markets that you would like me to review, just email me at storehouseanalytics@gmail.com. And also, if you wanted to come on board with the one-to-one training or getting the video course, just send me an email and I'll send you the details. It's storehouseanalytics@gmail.com. I look forward to hanging out with you guys more often in the new year on the Trading Institutional Order Flow thread. Probably before then, but I do have plans to be more present over there. I've just been caught up with a lot of things with my own trading group. But yeah, I hope this has been useful to you all. Have a great weekend. Take care of yourselves. Wash your hands. Wear your masks if that's what you do. And stay safe. The light at the end of the tunnel. Take care, everybody. Bye for now.